Today we're going to talk about all the different reasons that your car is keeping you broke. It's taking money out of your wallet in a lot of different ways, and I'm going to cover them right now. The first thing we want to talk about is repairs. We want to stop being reactive and start being proactive. So when you have a car that you're making payments on and you're trying to invest money into the market or into your future or life insurance or all those different types of things, your vehicle repairs can derail your investing. So what you want to do is budget out over the year what your car is going to cost you, and that way when these things come up, it's not such a surprise, and you can proactively do preventative care on the vehicle to keep it running longer without incident. When it comes to repairs, a good example we can use to talk about it today is the 15,000 mile service. Most vehicles require major service at about every 15,000 mile increment. So, let's take Volkswagen for instance right now. They don't need an oil change for 10,000 miles when they're new now. But when they hit 15,000 miles, they require more service. Those services cost money, and you can budget for that before they even occur. So when you have about 8,000 miles on your car, you can start thinking about it, budgeting for it, setting some dollars aside, so that way when it comes up, you can get that service done. Sometimes we skip those services and we end up paying for it in the long run, because if you don't flush the transmission or flush the brakes or stay on top of the servicing of your vehicle, then you're just working up to a big bill down the line when things break. So keep that in mind. That'll help save you a few bucks in the long run. The second thing I want to talk about is, are your payments too high? Have you looked at your loan interest rate in the past year to see what you're paying in interest on that current car that you're making payments on? You don't need a car dealer to refinance your car. You just need a relationship with a bank or a credit union. And so you can go visit them and figure out exactly what the rates are today. They have probably changed from when you took your loan out. If you had a 0% loan, obviously you don't want to refinance into a loan that has interest. But if you've got a loan that's say 8 or 9% and your credit has improved over the last few years, you can refinance that car at a bank or credit union, lower your payment, lower the amount of interest you're paying on the vehicle, and that'll save you a lot of money over the course of 5 to 6 years. Another way you're losing money on your vehicle is the condition is depreciating along with the vehicle depreciating over time. I did a whole nother video on the conditioning of your vehicle. You can go check that out. But remember, you should basically plan and budget for maintaining your vehicle's condition every year. Detail your car twice a year. Make sure they wax it. Make sure they look at the wheels and all of these types of things. That way the vehicle will remain at its peak value as it ages over time. That's something you should definitely keep in mind, is the condition of your vehicle. So let's recap. Make sure you're budgeting for your repairs. That's the first thing I would do. Second thing I would do is look at the current loan that you have right now. If your interest rates are high and they've changed and your credit's gotten better, you should definitely look at refinancing that car. Don't extend the term if you can avoid it, but definitely look at lowering that rate so that you'll pay less on that car over time. That would be number 2. Number 3 is basically making sure that you're taking care of the condition of your vehicle. You want to be sure to have that car detailed a couple of times a year, and you want it cleaned. That way the value stays high as the car gets older. I hope these tips helped you out today. Please like and share the video. And if you have any comments, please put them in the comments box. Ronnie Haskins, Auto Search USA.